Hello students, a warm welcome to all of them. I hope you all are doing good and fine. In our today's session, we will be starting with the chapter number 13, Corporation Tax. Before moving forward to our today's session, first we will discuss who will pay corporation tax. So students, the corporation tax the corporation tax will be paid by UK companies. Will be paid by UK companies. Corporation tax is the tax which is paid by the UK companies. The big corporates. The big corporates will pay the corporation tax. So the corporation tax in UK will be paid by the UK companies. Now in our today's session we will also be covering which are the companies which are known as UK companies, or whether the company is a UK resident or not. So students, as we have discussed that corporation tax will be paid by companies, now moving forward to the chapter learning objectives. Define the term period of account, accounting period and financial year. So first we will discuss what does the term period of account means, accounting period means, and financial year. Recognize when an accounting period starts and when an accounting period finishes. That is, when an accounting period starts and when accounting period finishes. Explain how the residence of a company is determined. Compute taxable total profits. Compute the corporation tax liability and apply marginal relief. Recognize the expenditure that is allowable in calculating the tax adjusted trading profit. What all are the expenses which are allowed or disallowed as per the tax rules. Recognize the relief which can be obtained for pre-trading expenditure, the relief for pre-trading expenditure. Compute capital allowance as for income tax and for disposal of assets on which the main pool super deduction of 130% and special rate pool first year allowance of 50% for expenditure incurred from 1st April 2021 to 31st March 2023 were claimed. So we will be studying the capital allowance for the companies, and we have two important topics here: the super deduction for main pool and super deduction for special rate pool. Compute property business profits and understand how relief for a property business loss is given. So how the property income will be assessed and how the reliefs we will claim in relation to the property loss. Recognize and apply the treatment of interest paid and received under the loan relationship rules. As students, we have seen that in an individual we will treat the interest income under the saving income head, but when coming to the case of companies we have different treatment for the interest received and paid. Recognize and apply the treatment of qualifying charitable donation. So the treatment for the qualifying charitable donation, the treatment for qualifying charitable donation for individual is totally different. When compared to the treatment for company, it is totally different. So in this chapter number 13 we will be covering these 6 topics as well as these 5 topics. So total 11 topics we will be covering in this chapter. So students, the most important point in this chapter is the first 5 topics. After this, the calculation of tax adjusted trading profit, then the capital allowance, then business property, then interest paid and received, and the treatment for qualifying charitable donation is easy. If the individual part you are clear, then these topics relating to trading, property, business and capital allowance will be easy. So the main topic of this chapter is these 5 topics. I hope this is clear to all of you. Now moving forward. Corporation tax, accounting period, residence of a company, whether a company is a UK resident or not, taxable total profit, corporation tax liability. And taxable total profit will include trading profit, interest income, long period of accounts, chargeable gains, charitable donation, property business profits. So these are the topics which we will be covering under this chapter. You will have learned how to produce financial statements in your financial accounting and financial reporting papers. In this unit, we look at how the profits generated are taxed. Mostly, we have already studied in our financial accounting or the financial reporting paper how to prepare the accounting books. But in our today's session, we will be studying the tax rules for the corporation, big corporates. So students, now we will be starting with the basis of assessment. We will be starting with the basis of assessment. Corporation tax is assessed on a company's taxable total profit. So the corporation tax for the companies, the corporation tax is assessed on the company's taxable total profit arising in an accounting period. Arising in an accounting period. So students, the corporation tax is assessed on the company's taxable total profits arising in an accounting period. The accounting period is not necessarily the same period as the company's set of accounts, period of accounts. So students, when we were discussing our individuals, we used to pay the tax as per the tax year from 6th April to 5th April. The years were aligned. In our examination, the years will be aligned. The tax year and the period of accounts, the accounting book, the accounting period will be aligned in the case of individuals. But coming to the case of companies, the corporation tax is assessed on the company's taxable total profit arising in an accounting period. The accounting period is not necessarily the same period as the company's set of accounts, that is period of accounts. So period of accounts and accounting period will be different, not much different. Period of accounts means the books are prepared, the accounting books are prepared for the example, the financial statement, etc. are prepared for 12 months, 18 months, 20 months, etc. But the tax is paid on the basis of accounting period. It is important when dealing with corporation tax to understand the term period of account and accounting period. So students, now we need to understand the difference between period of accounts and accounting period. Already we have discussed that period of accounts and accounting period, we know that it is the months for which the books are prepared, the accounting books are prepared. But students, coming to the corporation tax is based on the accounting period, the most important point of this chapter. The corporation tax is based on the accounting period, on the taxable total profits arising in an accounting period. Now we will be covering what is the difference between period of accounts and accounting period. A period of account is any period for which a company prepares account. Period of account is any period for which the company prepare account. It is usually 12 months in a length, but may be short or longer than this. So students, period of account means any period for which the company prepares the accounting books. So this period of accounts will usually be for 12 months. 12 months books are prepared by most of the company, but this can either be short or long. I hope the period of account is clear. Now coming to the term accounting period. An accounting period is the period for which a charge to corporation tax is made. It is never longer than 12 months. So students, the accounting period is the period for which the corporation tax is charged, and this accounting period will never be more than 12 months. Will never be more than 12 months. It can be less than 12 months. Less than 12 months it can be, but it will not be more than 12 months. I hope this is clear, the basis of assessment. So students, till now we have studied the basis of assessment. The basis of assessment for companies. The basis of assessment for companies. That is, the corporation tax is charged for accounting period. The corporation tax is charged for the accounting period. Now, what is the difference between accounting period and period of account? Period of account means companies' accounting books are prepared. Accounting books are prepared. So the period of account can be short or long. Usually it is 12 months, students, but in certain cases it can be short or long. But coming to the most important point, the accounting period. So the accounting period will be no longer than 12 months, but can be less than 12 months. I hope this is clear. Now students, as we have seen that accounting period is the period for which the corporation tax is charged. So accounting period is the period for which corporation tax is charged, So till now we have covered these two topics. The basis of assessment, period of account means the period for which the accounting books are prepared. It is usually 12 months, but it can be long or shorter. But coming to accounting period, it is the period which will not exceed more than 12 months, but it can be less than 12 months. And accounting period is the period for which the corporation tax is charged. Now students, moving to the next slide. Now accounting periods. As we have discussed that accounting period is the period for which corporation tax is charged. But in case of individuals, we have seen students, it is as per the tax year. In our examination, the rules will be the opening and the closing dates will be aligned. But from 24-25 accounting year, it will be on the tax year basis. That is 6th April to 5th April. If the period of account for the individual it is prepared more than 12 months, it will be split into the tax year basis. But students, in case of companies, the corporation tax is charged based on the accounting period, and accounting period will not be more than 12 months. So when does an accounting period start? An accounting period starts when a company starts to trade or receives income chargeable to corporation tax, and when the previous accounting period ends. So students, as we have already discussed the accounting period, now we are seeing when will the accounting period start. If an company is starting to trade, when will the accounting period start to pay the corporation tax? So the accounting period will start when a company starts to trade, that is, or receives income chargeable to corporation tax, when a company starts to trade or it receives any income on which the corporation tax will be calculated, and when the previous accounting period ends. Either the company starts to trade or when the previous accounting period ends. Now coming to the case, when does an accounting period ends? As we know students, the accounting period will not be more than 12 months. So the main situation where an accounting period ends are 12 months after the beginning of the accounting period. That is from 1st Jan to 31st December, means not more than 12 months. So 12 months after the beginning of the accounting period, the end of the company's period of account means the end of the company's period of account. If the company's period of account is earlier, then it will be considered this as the accounting period date. The date the company begins or ceases to trade. So students, the accounting period will end 12 months after the beginning of the accounting period. The end of the company's period of accounts, that is the accounting books for which number of months they are prepared, for how many months it is be prepared, the accounting books. The date the company begins or ceases to trade. Note that the date on which a company's period of accounts end will be referred to in the examination as the accounting reference date. It can also be referred to as accounting date. Students. So students, the accounting period will end earlier of these three dates. We have further cases like when the company entering or ceasing into administration, company winding up, the company ceasing to carrying trade, or the company will not be liable to the corporation tax. So these three are the most important. Other things we have no need to concentrate on that. These three, the accounting period will start. So students, we have seen the accounting period. Now the accounting period will start when? The first case is when the company starts to trade, or, and the second case would be immediately after the end of previous accounting period. Students, I hope this point is clear, that the company's accounting period will start when the company starts to trade or after the end of the previous accounting period, and the accounting period will end. The accounting period will end, students, when earlier of these three dates. That is, the first case is 12 months from the start of accounting period. 12 months from the start of accounting period. The second case was end of the company's period of account. Period of account means, students, the accounting books are prepared for how many months. The third case was when company starts to cease trade. We have further cases like when company will go into administration, will go into liquidation, when the company will not be liable to corporation tax. But the most three important are 12 months from the start of accounting period, end of the company's period of accounts, companies start to cease the trade. So I hope this is clear, students. When does the accounting period start and when does the accounting period ends? The accounting period will never be more than 12 months. Excuse me. Now coming to the case of long period of accounts. What does long period of accounts means? For corporation tax purpose, an accounting period can never exceed 12 months. As we have already discussed, the accounting period cannot exceed more than 12 months. But the corporation tax is based on the accounting period, students. The corporation tax will be paid on the accounting period, and the accounting period will end earlier of these three dates. So earlier of three dates we need to consider. If it is only 9 months, then we need to calculate the corporation tax for 9 months only. No issues in that. Therefore, if a company prepares accounts for a period of more than 12 months, there are two accounting periods for tax purpose. So students, if the period of accounts are prepared for more than 12 months, but we are paying the tax on accounting period, so the period of accounts will be split into two accounting periods. That is the first 12 months long period. Second accounting period will be the balance of long period. So students, we will be taking an example here. Now coming to the case of long accounting periods. So students, as we have discussed, the accounting period will not be more than 12 months. This is clear. But if the period of accounts is more than 12 months, let's take an example from 1st Jan 2023 to 30th June 2024. So this is the period of accounts for which the accounting books are prepared. Accounting books are prepared. But now students, for corporation tax, we have seen that the corporation tax will be paid on accounting period. So if we have long period of accounts, the long period of accounts will be split into two accounting period. So split into two accounting period. So in our case it will be 1st Jan 2023 to 31st December 2023. This will be our first accounting period. This will be our first accounting period, known as the 12 months long period. And our second accounting period, students, it will be, our second accounting period will be, now accounting period starts end of the previous of accounting, end of the, either the company starts to trade. Students, here we have already covered. When does the accounting period will start? An accounting period will start when the company starts to trade and immediately after the end of the previous accounting period. So in this case, in our example, already we have seen here, students, in our example here, already in our case, the accounting period has ended. Now the accounting period will start and immediately after the end of previous accounting period. So 1st Jan 2024. And now students, the accounting period will end. The accounting period will end earlier of 3 dates. The earlier of 3 dates were, as we have already discussed here, 12 months from the start of accounting period. In our case, it will be 31st December 2024. The second date will be, students, end of the company's period of accounts. So the end of the company's period of account is 30th June, students. Please do keep in mind 30th June 2024. And cease, the company is not ceasing, so no date for this. So the earlier of 3 date is 30th June. So our accounting period will be 1st Jan 2024 to 30th June 2024. That is 1st Jan 2024 to 30th June 2024. I hope the long period of accounts along with the accounting period rules, it is clear. So as we have seen, the long period of accounts will be divided into two accounting period. The first one will be for the 12 months period and the second will be the balance of the long period. I hope this is clear. Now moving to the tax residence of a company. As we have seen, students, that companies resident in UK are chargeable to corporation tax. If a company is a resident in UK and if it's earning money, then corporation tax will be applicable. So a company resident in UK are chargeable to corporation tax on all profits, that is income and chargeable gains. That is, chargeable gains include the capital asset. So for in case of companies, the chargeable gain is under the corporation tax only. We do not have any other separate the CGT implications for companies. It will be covered under the head of corporation tax wherever they rise on worldwide incomes and gains. So students, if a company is a UK resident, then corporation tax will be charged on all profits, that is income, chargeable gains, whether they arise from worldwide incomes and gains. So if a company is a UK resident, then corporation tax will be paid on worldwide incomes and gains. It is therefore important to correctly determine whether a company is resident. A company is UK resident if it is incorporated in the UK, if the company is incorporated in UK or incorporated elsewhere but is centrally managed and controlled in UK. So students, if a company is incorporated in UK or incorporated elsewhere but is centrally managed and controlled in UK, this company will be a UK resident. A company that is incorporated in UK is resident in UK regardless of where it is centrally managed. So students, if a UK company is incorporated in UK, then UK residents. Even if it is centrally managed through other countries, no issues. If it is incorporated in UK, then it will be a UK resident. So now students, we have covered the tax, residence of a company. So students, if a company is a UK resident, then will pay corporation tax on worldwide incomes and gains. I hope this is clear. If a company is a UK resident, then it will pay corporation tax on worldwide incomes and gains. And the UK residency, that is the UK residence of a company, is determined by if a company is incorporated in UK, then it will be a UK resident. If not incorporated in UK but managed and controlled in UK. So the UK residence will be the company which is UK resident. Either it is incorporated in UK, or if it is not incorporated in UK but centrally managed and controlled in UK, then the company will be a UK resident. And students, one more important point we have discussed here. If the company is incorporated, it will be automatically be a UK resident, regardless of whether it is centrally managed or not. So let's draw a flow chart for the student so that it will be clear. So companies incorporated. So as we have discussed students, that if a company incorporated in UK or incorporated overseas, that is other country, incorporated overseas, that is some other country. If an company is incorporated in UK, it will be a UK resident company. UK company, students, let's mention it as UK company so that it will be good for our understanding. UK company. So now students, if we have seen another case, that if it is centrally managed and controlled in UK. If it is centrally managed and controlled in UK, students, then also it will be a UK company. If it is incorporated in UK, not UK resident, it will not be a UK resident. But students, an important point here is, if incorporated overseas and centrally managed and controlled in UK, it will be a UK company. I hope this point is clear. As we have already seen, a company that is incorporated in UK is resident in UK regardless of where it is centrally managed and controlled. So students, I hope this is clear. If it is incorporated in UK, students, if it is incorporated in UK, then UK company. If it is centrally managed and controlled in UK and UK incorporated in UK, then also it will be UK company. But incorporated overseas, but it is incorporated overseas, but it is centrally managed and controlled in UK, then it will be a UK resident. Incorporated elsewhere, but is centrally managed and controlled in UK. I hope this point is clear. So now moving to the next. Now coming to the next important topic is the taxable total profit. A company, as we have already seen students, the company will pay corporation tax on the taxable total profit for the accounting period, which is not more than 12 months. A company's taxable total profit for an accounting period, are total profits from all sources less qualifying charitable donations. So students, the company's taxable total profit will be total profit from all the sources like trading, interest income, miscellaneous income, property income, capital gain tax income, etc. less qualifying charitable donations. This will give rise to the taxable total profit. So the taxable total profit is total profit from all the sources less qualifying charitable donation. A company's total profits are worldwide income excluding dividend plus net chargeable gains. So students, the total profit will include all the profits from all the sources, but it will not include dividend income. In case of corporation tax, the income in the form of dividend for the company will be exempt. The dividend income will be exempt. No tax on dividend income. We'll be seeing further. So the profits, the company's total profits will include all worldwide incomes and gains excluding dividend. The pro forma below sets out the different source of income included in the total profits. Here we will be studying this. So students, the company's corporation tax will be levied on the taxable total profit. Taxable total profit includes all the total profits from all the sources. It will exclude the dividend income and chargeable gain, that is the net chargeable gains. So the total taxable total profit will be total profit less qualifying charitable donations. Now we will be seeing the format, the corporation tax format students. As we have in our previous sessions in our individual self-assessment for individual, we have seen the format for income tax computation for individuals. Now we will be covering the format for corporation tax. Company's name, corporation tax computation for the year ended 31st March 2024, tax adjusted trading profit, interest income, property income, miscellaneous income, chargeable gain. So these all are the sources of income for the company. This will give rise to the total profits. Total profits less QCD, qualifying charitable donation, will give rise to the taxable total profits. So students, and company will be having many sources of income: trading income, interest income, property income, miscellaneous income, chargeable gains. So this will give rise to the total profits. Then we will reduce the QCD, qualifying charitable donation, so that we arrive to our taxable total profit. I hope this is clear. The taxable total profit students. So now coming to the taxable total profits. The taxable total profit will include all profits, no students, profits from all the sources, profits from all the source less QCD. Profits from all the source less QCD will be our taxable total profit. Now students, this profit will include all incomes and gains all worldwide incomes and gains, all worldwide incomes and gains, all worldwide incomes and gains, but excluding one, but it will exclude dividend income. It will exclude the dividend income. I hope this is clear. Now the corporation tax format. So the all these sources of income are, students, the tax adjusted trading profit, tax adjusted trading profit. Then the second type of income is the interest income, or we can also call it as non-trade loan, non-trade loan relations. Then the next is property income. Then coming to chargeable gains, sorry students. So this is the format, so including chargeable gains. Then miscellaneous income, students, please do refer here. We have miscellaneous means other type of incomes. It will include other types of income, so it will be miscellaneous income, miscellaneous income. So this will be our total profits from all these sources, from worldwide incomes and gain, less the important here is the less QCD. QCD is qualifying charitable donation, qualifying charitable donation less. So this will give rise to our taxable total profits. And on this taxable total profit, students, we will be calculating our corporation tax. I hope till here it is clear. Now moving to the next slide. Now we will be studying the corporation tax liability. What are the corporation tax rates? How we will calculate the corporation tax liability? As till now we have studied that the corporation tax will be paid on the taxable total profits for the accounting periods. So corporation tax is levied on the taxable total profits of the accounting period. Now we will be studying how to calculate the corporation tax liability. A company's corporation tax liability is calculated by applying the appropriate rate of corporation tax to the company's taxable total profit. So the rate of corporation tax will be applied on the taxable total profit, so that we arrive to our corporation tax liability. Determining the relevant rate of corporation tax. The rate of corporation tax is determined by comparing a company's augmented profit to statutory limits. So now first we will be seeing what is augmented profit, because students, for determining the corporation tax, the rate of corporation tax is determined by comparing a company's augmented profit to statutory limit. So the company's augmented profit will be compared to the statutory limit, so that we will be able to identify the tax rate for the corporation. So now first we need to discuss what does the term augmented profit means and what does statutory limit means. First we will be covering augmented profits are calculated as follows. Taxable total profit, that is a TTP, same this is known as TTP. So to calculate our augmented profit, first we will consider the TTP, taxable total profit, plus dividend received from non-associated companies. So students, as we are moving further, we are learning some new terms. Like first we came to the augmented profits, then we got to know that how to calculate augmented profits. Taxable total profit plus dividend received from non-associated company. Now, what does non-associated company means? We'll be covering in our next slide what does non-associated company means. But for a brief explanation, non-associated company means where an individual or the company does not have any control. The company does not have any control in any other company. That means if a company has 51% stake in other company, then it will be an associated company. 50% share or voting rights or etc., then the company will be deemed as associated company. So but students, we have already seen that the dividend income will be excluded from the corporation tax, but the dividend which we receive from non-associated companies will help us to identify the rate of corporation tax. The dividend received from the non-associated company will be used in the calculation of augmented profit, which will help us to determine the rate of corporation tax. So students, the augmented profit is calculated TTP plus dividend received from non-associated companies. So augmented profit. Now dividend received. Although dividend received are exempt from corporation tax, they can have an impact on the rate of tax that the company pays and also whether corporation tax needs to be paid by installment. This will be covering under the company's self-assessment. So students, the dividend will be exempt from the corporation tax, but the dividend will have an impact on the rate of tax on which the company will be paying the corporation tax, and also whether the corporation tax needs to be paid into the installments to the HMRC. This, the second point, will be covering under the chapter number 16, self-assessment for companies. The amount of cash dividend received from non-associated companies are added to the TTP in order to arrive at the augmented profit figures. Dividend received from associated companies explained in chapter 15 are also ignored in the calculation. But students, we will be covering under this chapter only. We will be covering under this chapter only. Dividend received from associated companies explained in chapter 15 are also ignored in the calculation. That is, already we have seen dividend is exempt, but students, dividend received from associated company, it is ignored, but dividend received from non-associated companies, we need it for the augmented profit calculation so that we can determine the corporation tax. I hope this point is clear. So students, now coming to the next, calculating the corporation tax liability. Now the first step was the corporation tax liability will be paid on the taxable total profit. But to decide the rate of corporation tax, we will be calculating the augmented profit and compare it to the statutory limit. We have studied the augmented profit. Now we will be seeing the statutory limits. The rate of corporation tax is fixed by reference to financial years. So students, we have covered what is period of accounts, then accounting period. Now financial year. Financial year runs from 1st April to the following 31st March and is identified by the calendar year in which it belongs. That is, the financial year runs from 1st April to 31st March. I hope this is clear. The year commencing on 1st April 2023 and ending on 31st March 2024 is the financial year 23, FY23. But students, we will be paying the corporation tax liability on, the corporation tax will be paid based on the accounting periods, the taxable total profits of the accounting period. But to select the rate of tax, we need to calculate the augmented profit and compare with the statutory limit. Financial years should not be confused with tax years for personal taxes, which runs from 6th April to 5th April. This is totally different and this is totally different. Please do not confuse between these 2 points, the financial year and the tax year for the individual. Now coming to the rate of corporation tax needed for the tax exam. So students, for the previous Finance Act of 2022, we had a flat rate of 19%. But coming to the Finance Act of 2023, we have amendments. So this is an important area. This will be surely tested in your examination. 100% question will come from this area. As this is a new area and it has been amended, it will be there. This topic question will be there for sure. 5 to 6 marks for sure it will be there, students. So the tax rate of corporation tax needed for the tax exam are financial year 21, 22 and 23. Small profit rate nil. So the small profit rate is 19%. Main rate, as we have seen for the Finance Act, till Finance Act of 2022 we had a single rate of 19%. But coming to the finance year of 23 we have other rates. So we have two types of rates. Small profit rate is 19%, main rate is 25%. Lower limit, no lower limit, but for this year we have lower limit of 50,000 pounds, upper limit of 250,000 pounds and a standard fraction of 320. 3 divided by 200. This is relevant for us. This is we will be studying. So students, now as we have already seen this, now first we calculated the augmented profit to decide whether to determine the tax rate. Now we have studied here some tax rates and some limits. Now we'll be seeing how to connect the limits and the augmented profit. For FY21 and FY22, there was only one rate of corporation tax, that is 19%. However, for finance year, that is 23, two rates and marginal relief have been introduced and the following process must be followed. So for FY22 finance year 23, two rates, small rate and main rate. Small rate is 19%, marginal rate is 25%, students. And a marginal relief has been introduced. The relevant rate is found by comparing the augmented profit to the upper and lower limit. So the statutory limits were upper and lower limit. First calculate the augmented profit, compare it with the statutory limit. Statutory limits were upper and lower limits. So if augmented profit is within the lower limit, the augmented profits are below 50,000 pounds, TTP is charged at the smaller profits rates, that is 19%. If augmented profit is more than upper limit, the augmented profit exceeds the upper limit of 250,000, TTP is charged at the main rate. Where A, that is the augmented profit, falls in between the limits of 50,000 and 250,000 pounds, TTP is charged at the main rate of 25%, but a special marginal relief applies and is deducted from the corporation tax liability. So students, first we have seen that we have calculated the augmented profit, then we need to compare it with the statutory limits, and then we were able to identify the corporation rate. If the augmented profit is within the lower or below lower limit, the lower limit was, students, 50,000 pounds, and this limit is for 12 months period. The statutory limits are for the 12 months period. I hope this is clear. And students, if the augmented profits are below 50,000 pounds, small rate will apply. If the augmented profit is exceeds 250,000 pounds, then main rate will apply 25%. If the augmented profit falls between the limit of 50,000 and 250,000 pounds, then the TTP will be charged at main rate, but a special marginal relief applies, and this relief amount will be deducted from the corporation tax liability. I hope this is clear. First, we have seen that the corporation tax liability will be calculated on the taxable total profits. Now, how to determine the corporation rate? The corporation tax rate will be determined by comparing the augmented profits to statutory limits. Now, what is augmented profit? Augmented profit means taxable total profit plus dividend received from non-associated company will give rise to augmented profit, and this needs to be compared with the statutory limits, the lower and upper limit. If augmented profit are below 50,000 pounds, flat rate of 90%, and student, this 19% will apply on the taxable total profit. Do not charge this 19% on the augmented profit. I hope this is clear. Augmented profits are used to determine the tax rate, and if the augmented profit exceeds 250, the TTP will be charged at 25%, where A falls in between. If A falls in between, that the augmented profit falls between 50,000 pounds and 250,000 pounds, TTP is charged, that is taxable total profit is charged at main rate, but one special marginal relief is available and is deducted from the corporation tax liability. I hope this point is clear. Now students, we will make some summary notes of this. Now coming to corporation tax liability. Corporation tax liability. As we have already seen students, the corporation tax liability, the corporation tax is paid on taxable total profit, and the corporation tax liability will be no students, 1 minute. As we have already seen that the corporation tax is based on the taxable total profit. Now we need to determine the corporation tax rate. We need to determine determination of corporation tax rate. So students, we have seen that to determine the corporation tax, we need to compare two things. The first one is augmented profits. The augmented profits needs to be compared with statutory limit. Students, so that statutory limits. I hope this point is clear. As we have already seen that to identify the corporation tax, we need to compare the augmented profits with the statutory limit. Now, how to calculate augmented profits? So students, the augmented profit will be taxable total profits plus add dividend from non-associated company. But students, we have already seen that the dividend amount will be exempt from CGT. The dividend amount will be exempt from CGT. But the dividend received from non-associated companies will be useful to determine the corporation tax rate. And we have identified the augmented profit. Now we need to compare to the statutory limit to the compare the augmented profit needs to be compared with the statutory limits. The statutory limits are, students, we have two limits, that is upper limit and lower limit. Upper limit and lower limit. So the upper limit is, students, 250,000 pounds and the lower limit is 50,000 pounds. Now, if augmented profit now, students, the augmented profit we need to see. Now, a simple, if the augmented profit is between 0 to 50,000, that is the augmented profit will not exceed 50,000, as we have already seen here, students. If a augmented profit is lower limit, less than lower limit, the augmented profits are below 50,000, then TTP is charged at small rate, that is 19%. If the augmented profit exceeds 250, it will be paid at 25% in main rate, and if augmented profit is within the limits of 50,000 to 50, it will be paid at 25% and a special marginal relief will be available. So, student, if 0 to 50,000, then small rate, that is 19%. Small rate or 19%. Now, augmented profits 250 will be paid at main rate or 25% plus marginal relief will be available, student, plus marginal relief will be available. And if 250,000 greater, it will be paid at main rate, that is 25%. I hope this is clear, students. If the augmented profits, that is augmented profits are below 50,000, it will be paid at 19%. Augmented profits exceed 250, then at 25%, and augmented profits between 50 and 250 will be charged 25, and plus marginal relief will be paid. I hope this is clear, students. Above 250,000 pounds. So, students, now please do understand here, as we have already seen in an individual calculation, that the tax band of 0 to 37,700 works like a ruler, like a band. But in case of company, students, this will not work as a band. If the total augmented profit, augmented profit, if it lies in any three of them, the single rate will be applicable. If the augmented profit is, let's take an example here. So, example, augmented profit is 55,000. So, as the augmented profits is between 50,000 and 250, so the rate will be main rate, that is 25%, plus marginal relief, marginal relief. Students, it will not be like a tax band we have studied in the individual, that from 0 to 50,000 at 19%, then 50,000, the difference of 50,000 to 55 at 25. No, students, no. This will not be applicable. The augmented profit will be compared to the statutory limit to identify a single tax rate. So, let's take an example. If our augmented profit is to 80,000 pounds, so it will be taxed at the main rate at 25%. As the augmented profit is about 250, so it will be paid at the main rate. I hope this is clear. This point is clear. The augmented profits, the relevant rate is found by comparing the augmented profits to the upper and lower limits. If augmented profits is lower, that the augmented profits are below 50,000, TTP is charged at the smaller profit rate, that is 19%. If augmented profit does not exceeds 250,000, then it will be charged at 25%. And where the augmented falls between the limit of 50,000 and 250,000, then TTP is charged at the main rate of 25% plus marginal rate. And students, these rates will not act like a tax band. These rates will not act as a tax band. I hope this is clear. I hope the point is clear. I hope this point is clear. So students, here it will be 49,999. 1 minute students. So we have seen here, already we have seen here that the below 50,000 means it will not be equal to 50,000. It will not be equal to 50,000. It will not be equal to 50,000. So 19% will be applicable, students, if the augmented profit is from 0 between this rate, so small rate. That means the augmented profit should not exceed or equal to 50,000. So let's make a clear cut idea of this. Augmented profit should not exceed or equal to 50,000 pounds. I hope this is clear. And this is above 25,000 pounds. So this will be a better understanding. This they have not provided in your book or anywhere. This is, I have prepared it. So students, if the augmented profit is and does not exceed 50,000 or below 50,000 pounds, then the small rate will be applicable. If augmented profit exceeds 250, that is more than 250,000, 25%. If augmented profit falls within the limit of 50,000 and 250, it will be taxed at marginal rate plus a special relief will be available. Now students, we will be seeing the marginal relief. Then we will be solving questions. Marginal relief. Marginal relief is available if augmented profit falls between the upper and lower limit and is calculated as follows. So the marginal relief is upper limit minus augmented profit into standard fraction of 3 divided by 200 into taxable total profit divided by augmented profit. The rate of corporation tax and formula for calculating marginal reliefs are included in the tax rate and allowance provided to you in the examination. So students, this will be provided in your examination. This will not be provided, this you need to learn, but the rates of corporation tax and the formula for calculating the marginal relief, this will also be included, students. And formula for calculating marginal relief are included and will be included in your tax rate and allowance sheet. I hope this is clear, students. Please do learn the formula for marginal relief so that we can this will also be provided, students, as it is mentioned here. So I hope this is clear. Now students, we have already seen the marginal relief. The marginal relief formula will be marginal relief. The marginal relief will be upper limit less augmented profit into 3 by 200, that is the standard deduction, and into taxable TTP divided by the augmented profits. I hope this formula is clear of the marginal relief. Now students, we will be solving questions so that we have better understanding. Till now we have done till here. Z has taxable total profit of 28,000 in the year end 31st March 2024 and receives dividend of 10,000 from non-connected companies, calculate Z corporation tax liability for the year ended 31st March 2024. So students, the corporation tax will be paid on the taxable total profits, that is 28,000, and now we need to determine the corporation tax rate. Corporation tax rate will be determined comparing augmented profits with the statutory limit. Here students, augmented profit will be TTP plus dividend from non-associated company, means non-connected company. Associated means connected companies. In TTP we have non-connected companies, unconnected companies, so it is 10,000 plus dividend from unconnected companies. So our augmented profits will be 28,000 plus 10,000, it will be 38,000. It will be students 38,000. Now students, the augmented profit needs to be compared with the limit, as this is the augmented profit, are below 50,000 pounds, that is it should not be equal to 50,000 also students. It is below 50,000 pounds, so it will be taxed at main rate. So the whole TTP will be taxed at the main rate. Please do not compare this with the tax band we have studied in our individual calculation. No students, individual income tax, these are totally different. The augmented profit in which it will lie, that tax rate will be applicable to all taxable total profit. So 19%. So this will give rise to 28,000 into 19%, 5,320. Now moving to the second question. B has the following results for the year ended 31st March 2024. So this is the accounting period, 12 months. The taxable total profits are 320,000. Dividend received from unconnected companies are 18,000. Calculate B Limited corporation tax liability for the year ended 31st March 2024. So corporation tax is paid on TTP. The TTP already mentioned 320,000, and the corporation tax rate will be determined by comparing the augmented profits with the statutory limits. And students, the augmented profits is TTP plus dividends from non-associated companies, that is non-connected companies, or the companies which are not connected. As we have already seen, if the dividend is paid, it is exempt, but the dividend will be used to determine the corporation tax. So here our TTP plus dividend will be 320,000 plus 18,000. So it will be students 320,000 plus 18,000. So our TTP will be 338,000, as our augmented profits exceeds 25,000 pounds, as our augmented profits exceed 25 above 20 250,000 pounds, will be taxed at the main rate. Students, will be taxed at the main rate. So the main rate is 25% into 25%. So this will be 80,000 of corporation tax liability. 80,000 of corporation tax liability. I hope this point is clear to all of you. So here our corporation tax liability for students 5,000 is a 320 is a corporation tax liability. Now moving to the third case. S Limited has following results for year ended 31st March 2024. TTP is 150. Dividend received from unconnected company is 30,000. So corporation tax will be paid on TTP. Our TTP is 150,000 pounds, but the corporation tax rate will be determined by comparing augmented profits with statutory limit. And students, the augmented profit here is TTP plus dividend from non-associated companies. So augmented profit will be 150 TTP plus dividend from unconnected companies, it is 30,000. So it will be, students, 180,000. So now, as our augmented profit is between the limits of 50,000 and 25,000 to 50,000 pounds, the TTP is taxed at 25%, but a special marginal relief will be deducted from the corporation tax liability. Will be deducted from the corporation tax liability. See here, students, if 50,000 and 250, main rate plus marginal relief, and the marginal relief formula is upper limit minus augmented profits into standard fraction 3 into 3 divided by 200 into TTP divided by augmented profits. Now, so we will be calculating the corporation tax liability. Corporation tax liability will be paid at this. So TTP into main rate 25%. This will be, students, 37,700. Now, if our augmented profit between 50,000 to 50,000 pounds, TTP is charged at 25%. First step we have done. Less, this is corporation tax liability. This is a liability, but less marginal relief or special marginal relief applies and is deducted from corporation tax liability. So less marginal relief. So now, students, we need to calculate the marginal relief. So the marginal relief is upper limit. Upper limit is, students, 250,000 minus augmented profit. Augmented profits are 180. Students, please do not confuse between the augmented profits, TTP, and marginal relief. Corporation tax is charged on TTP, but augmented profit is used to identify, helps to determine the corporation tax rate. Marginal relief, upper limit minus augmented profit into 3 divided by 200 into TTP. TTP is 150 divided by augmented profit or augmented profits. So this will give us a, this will be, our marginal relief will be, students, 70,000 into 3 divided by 200 into 15 by 18. So 70,000 into 3 divided by 200 into 15 divided by 18. So it will be, students, the augmented profit, the marginal relief will be 875, and this will be reduced from the corporation tax liability 875. This, this will give the marginal relief, that is 37,500 minus 875. It will be 36,625. I hope this is clear. This three questions we have solved in an order, and we have seen if the augmented profit below 50,000 pounds, exceed 250,000 pounds, and between 50,000 pounds and 250,000 pounds. And we have seen the marginal relief also. Now, students, coming to some specific cases. Marginal relief we have done. Now coming to short accounting period. Corporation tax is charged on taxable total profits of the accounting period. So the taxable total profits of the accounting period are charged for the corporation tax. Now coming in the case, now till now we have seen, students, it is usually 12 months, but now coming to the case of short accounting periods. Now coming to the case of short accounting periods. And students, one important point, let me mention here, I'll be mentioning here, the students, one point you need to keep in mind, that these will not act as a tax band. It will not act as a tax band. So we'll be mentioning a note here so that it will be very helpful. So students, one important note. Corporation tax In corporation tax, the that is these limits. These limits means in corporation tax, these limits means the upper and low limit. These limits are used to determine one tax rate on whole profit. So these limits are used to determine one tax rate for the whole profits. I hope this is clear. And these will not work as tax band. Simple. If augmented profit is below 50,000, small rate 19%. If the second case was, if the augmented profit is above 250,000 pounds, main rate. But students, if augmented profit is between 50,000 pound and 250,000 pound, main rate will be applicable plus marginal rate, and this is a single tax rate. It will not tax at the tax band. I hope this is clear. I mentioned this note also, it will be very helpful. This is very important, students. This is very important. This is an important point to note. Now students, coming to short accounting periods. As we have discussed long accounting period means, like the long accounting period of example of 18 months, it will be split into two accounting periods. The first one will be the 12 months accounting period known as long period of account. Here we have covered, students. Long period of account. First AP will be first 12 months period of long period and the balance of long period. So the first accounting period will be 12 months of long period, that is 18 months means 12 months, and the rest will be the second accounting period. So short accounting periods. The upper and lower augmented profit limits of 250,000 pounds and 50,000 pounds apply for accounting periods for 12 months. So students, we have seen that the 250,000 pound and 50,000 pound are for 12 months accounting period. If the accounting period is long, we will split into two accounting periods. The first one will be 12 months of the long accounting period, that is 18 months means first 12 months. Then the second one will be rest months of the long period of accounts. Long accounting period, not period of accounting period or the long period. I hope this is clear. Now students, coming to short accounting period, the upper and lower augmented profit limits of 250,000 pound and 50,000 apply for accounting periods of 12 months. So students, as already mentioned by me, that the limits are for 12 months period. If an accounting period is for less than 12 months, the limit must be reduced proportionately. Simple. If the accounting period is short, proportion the limits or apportion the limits. If the accounting period is of 8 months, so 250,000 pounds into 8 divided by 12, 50,000 pounds into 8 divided by 12. So this will give rise to our new accounting period of 16667, and this will be 33334. Oh, I hope this is clear. Now students, as we have seen, augmented profit compared with the statutory limit. The statutory limits were upper limit and lower limit. The upper limit was 250,000 pounds and the lower limit was 50,000 pounds. And this 50,000 and 250,000 pounds will be reduced based on the accounting period. If short accounting period, it will be reduced, and the accounting limits will also be divided based on the number of associated companies. So students, basically when coming to the case of short accounting period, the limits will be apportioned. And associated companies will be covering in more detail associated company. The upper and lower limit used to determine the rate of corporation tax are divided by the number of associated companies. So the lower and upper limit will be reduced or will be apportioned based on the short accounting period. If the accounting period is short, we will reduce it, and if we have associated companies, if we have associated companies, then what is the number of the associated company? That number will be used to divide the upper limit. As we have seen in our example, 250 into, so our accounting period is only for 6 months, students. So 6 divided by 12. But we also have 3 associated company. So this into 6 divided by 12 divided by, let's take an example of associated company of 5. So 5, it will be 25,000. Our limit will be 25,000. So students, the upper and lower limit will be divided in the case of short accounting period and number of associated companies. Number of associated companies. Now coming, what does associated company means? Before that, we will be making a note here. Short accounting period. Students, we have already covered the long accounting period. If long accounting period means, it will be split into 2 accounting periods. First 12 months and the rest of the long period of accounts. Then the short accounting period, in this case, the upper limit and lower limits will be apportioned or will be reduced upper limit and lower limit will be reduced proportionately. I hope this is clear. And coming to the case of associated company, students. Coming to the case of associated companies. Students, as already mentioned by me, associated company means the company which is controlled. Now we will be seeing what does the term control means. In associated companies, 2 companies are associated companies if one company controls the other. So 2 company A and company B are associated if one company controls the other or both are controlled by a same person. If either A controls B or A and B are controlled by C or some other person. So students, associated company means both are one company controls the other or both the companies both are controlled by a same person, that is company or individual. Now coming to the term control. Control means that the person has more than 50%. More than 50% means 51% holding must be there. 51% holding must be there. So students, the term control means 51% more than holding must be there with the person. The issued share capital of another company, that is the control can be in the form of share capital, the 51% of the shareholding or 51% voting right, the right to receive distributable profits, the right to receive distributable profits, that is more than 50% profits must be distributed to that person, the right to receive the net assets in the event of a winding up. So control means more than 50% control on share capital, voting rights, distributable profits and net assets in the event of winding up. The term control means. So students, 2 companies are associated if one company controls the other or both are controlled by the same person. Points to note. Questions in the exam may require you to remember to include the parent company in the number of associated company. That is, if P is controlling A, B, C and D. P means parent company, a company which controls two or more companies. Control means more than 50% holding. So the company controlling two or more companies will be known as parent company. So the parent company will also be included in the number of associated companies. Understand that companies that are associated for only part of an accounting period are deemed to be associated for the whole of the accounting period. If in our accounting period, if our accounting period is for 12 months, it will be for 12 months. And if a company was controlled for only for 6 months, then this company will be assumed as associated company for the whole 12 months accounting period. If our 12 months from 1st Jan to 31st December, if on 1st August we sold a company in which we had 70% holding, but we'll calculate the corporation tax liability at the end. So at that time this will not be included, this will not be associated company. But if a company that are associated only for part of the accounting period are deemed to be associated for the whole of the accounting period. Understand that both UK resident and overseas resident companies are included. So either UK resident or overseas resident will be included. UK companies or overseas resident companies will be included in the associated companies. Understand that dormant companies are excluded. So dormant companies will be excluded. Dormant companies means the companies which are not carrying out any trade or any activity. They are not trading. So the associated, in the case of associated companies, the number of associated company needs to be calculated and the parent company needs to be included. So if a company is associated for part accounting period, it will be considered as associated company for the whole accounting period. And the associated companies are overseas resident will also be included. If UK resident, will both UK and overseas companies will be included in the associated companies. But one important point is that dormant companies will not be included. Dormant means the companies which are not carrying out any trade. Now coming to the questions in the exam may require you to identify the number of associated companies in a group, or ask you to justify the number having given the number of associated companies. You must explain why companies are included and excluded. In the exam, either you will be asked to identify the number of associated company, or in the section C, the number of associated company will be given, but you need to justify why it is an associated company, because you need to write that it is controlled. If it is controlled, either UK resident company or overseas resident, it will be included. So students, we have seen here implications of being associated. Now we will be studying the implication. Already mentioned by me, the upper limit and lower limit will be divided. The tax implication of being associated are: the upper and lower limit used to determine the rate of corporation tax are divided by the number of associated companies. Intra-group dividends are not treated as frank investment income for the purpose of calculating the company's augmented profit. So dividend income will not be included. Tax rate. See students, we have already mentioned that the dividend from non-associated company will be included in the calculation of augmented profit. But intra-group dividend from associated company means controlled company. So it will not be included in the augmented profit calculation. Tax rate. The identification of number of associated company is the starting point for every group question, as this establishes the applicable lower and upper limit for each company, because we will compare the augmented profit with the upper and lower limit to determine the tax rate, to determine the corporation tax rate, and therefore the rate of corporation tax applicable to each company. Note that if marginal relief applies, use the revised upper limit in the marginal relief calculation. So this is an important point, students. Note that if marginal relief applies, means let's take an example that the upper limit has been reduced and marginal relief applies. Use the revised upper limits in the marginal relief calculation. When we perform our marginal relief calculation, upper limit minus augmented profit into 3 divided by 200 into TTP divided by augmented profit. Here the upper limit must be the revised one, because the upper limit will be reduced by the short accounting period or by the associated companies, the number of associated companies. I hope this is clear. Now students, as we have seen that the upper limit and lower limit will be reduced if we have a short accounting period and associated company. So associated companies are two companies are associated if one company controls other or both companies are controlled by single person, not single person, let's mention it as same person, by the same person. Person means here company or individual. So students, the term control means more than 50% shareholding or voting rights or more than 50% rights for the profits and more than 50% rights in the assets, 50% rights for the assets when the company is seized or winding up, when the company is winding up. I hope this is clear, students. And students, we have seen the implication of associated company is that the upper limit and lower limit will be divided by the number of associated companies. The associated company, students, and we have seen the number of associated companies will include parent company will also be included in the associated company, in the number of associated companies. Excuse me. And the second point was, students, UK and no, we'll be mentioning both UK and overseas companies are included. That is means if the company is a overseas associated company, it will be included. And the third point is dormant company will not include. And students, we have seen a fourth point, that is, if company is associated for half of the accounting period, then it will be assumed that the company is associated for the whole accounting period. I hope this is clear, students. Now we will be solving questions so that we have better understanding of the short accounting period and as well as the associated companies. In both the case, the issue was same only, students. We need to reduce it. We need to reduce it. We need to reduce it. $150 and $30,000. 1 minute, students. No issues. Here we have seen this is for year ended 31st March. No issues here. C has the following result for 34 TTP dividend from non-group company. Calculate. One minute, students. Sure. Oh, okay. Here we have. So we'll be seeing one question here so that we have, this is also we have not solved. This is same as the previous question. C Limited has the following results for the year ended 31st March 2024. TTP, calculate the corporation tax liability. Corporation tax liability will be paid on the TTP. TTP is 120,000, students, into the corporation tax rate. Corporation tax rate, we will compare the augmented profits with the statutory limits. And statutory limits will not be divided. Here nothing they have mentioned about the associated company and short accounting period. So students, so our accounting augmented profit will be TTP plus dividend, that is 15,000, it is 135,000, and this is within the limit of 50,000 and 250,000. So the corporation tax, the TTP will be charged at main rate, that is 25% less marginal relief. So this will be 120,000 into 25. Students, please do keep in mind the corporation tax is based on the TTP, taxable total profit, but augmented profit is used to determine the corporation tax rate, and dividends are exempt, but dividends from unconnected companies, non-associated companies will be used to calculate the augmented profits. So now coming to marginal relief. Marginal relief is upper limit is 250,000, students, less augmented profit is 135,000 pounds into 3 divided by 200 into TTP is 120,000 pounds divided by augmented profit 135,000. So students, our marginal relief will be 250,000 minus 130 or 250 minus 135 into 3 divided by 200 into 120 divided by 135. It is 1,533 pounds. So our corporation tax liability, this is our corporation tax liability, students, and the marginal relief will reduce the corporation tax liability. So our corporation tax liability will be 30,000 minus 5,533. It will be 28,467. I hope this is clear. Now coming to the case of short accounting period, students. Now coming to the case of short accounting period. E Limited has the following results for 9 months ended. So it is 9 months. This is short accounting period. Short accounting. This is the accounting period is usually for 12 months. But students, it is for less than 12 months. We need to divide the upper limit and lower limit. So the TTP is 150,000 and dividend received from unconnected company is 30,000 pounds. Calculate the corporation tax liability for E Limited. So the corporation tax will be calculated on the TTP. Our TTP is 150,000 pounds into the corporation tax rate. But now a corporation tax rate will be compared. Corporation tax rate will be, how we will select the corporation tax rate? By comparing augmented profits with the statutory limits. But in this case, our augmented profit will be, students, TTP plus dividend from non-associated companies. From the non-dividends from the non-associated companies. So our AP will be 150 plus 30,000. It will be 180,000. I hope this is clear. Now the statutory limit needs to be divided. Upper limit and lower limit. Upper limit is 250,000, students. Lower limit is 50,000. Lower limit is 50,000. This needs to be a portion because short accounting period. The accounting period is less than 12 months. The upper limit and lower limit will be divided in two cases only, students. If it is short accounting period, and the second case is number of associated companies. So here it is 9 divided by 12 into 9 divided by 12. So it will be, students, our limits will be 187,500 pounds, and 50,000 to 9 divided by 12, it will be 37,500. So now, students, this limits have been changed. Now if the augmented profit is below 37,500, it will be taxed at small rate, that is 19%. If the augmented profit is exceeding 187,500 pounds, then it will be taxed at 187,500. It will be taxed at 25% marginal, the main rate. But if the augmented profit is between the upper limit and lower limit, it will be taxed at the main rate 25%, and marginal relief will be provided. Here in our case, our augmented profit is 180,000 pounds. So this will be taxed at the main rate plus marginal relief will be provided. So the CT will be TTP 150 into main rate, because our augmented profit is used to determine the corporation tax rate. So this is, students, 150,000 pounds, that is 37,500 less marginal relief. Now marginal relief. So students, when the upper limit and lower limit will be affected, we need to use the revised upper limit and lower limit for the marginal relief. So upper limit revised is 187,500 pounds less augmented profit is 180,000, students, into 3 divided by 200 into TTP. TTP is 150 divided by augmented profit is 180. I hope this is clear. So our marginal relief will be, students, 94. So the total corporation tax liability will be 37,500 minus 94. So it will be 37,406. I hope the concept of short accounting period is clear. Now coming to other question. R Limited has following results of 6 months ended 31st December. Okay, it is only for 6 months. 6 months ended 31st December. So short accounting period. TTP 110. Dividend from unconnected companies, it is 10,000, students. It is 10,000. So corporation tax liability will be paid on TTP. TTP is 110,000 pounds. So corporation tax rate, we need to compare augmented profits with the statutory limits. So augmented profit will be TTP plus dividend from non-associated companies. So our AP will be, augmented profit will be 120,000. Now students, the upper and lower limit needs to be apportioned because it is a short accounting period. The accounting period is short, only for 6 months. As we have seen that the limits will be for 12 months accounting period, but your accounting period is only for 6 months. We need to apportion it. So here it will be 250 divided by 125. Upper limit and lower limit is 25,000. Now students, we need to compare the augmented profit. Augmented profit is 120. We need to compare with the statutory limit. If the augmented profit is below 25,000 pound at small rate, if the augmented profit exceeds 125,000 pound at main rate, if the augmented profit is between the limit of 25,000 and 125,000 pounds, it will be taxed at main rate 25%, but additional relief will be available. What is the additional relief? Special marginal relief will be available. So now corporation tax liability paid on TTP, our TTP is into 25% less marginal relief. But students, when we calculate the marginal relief, we need to use the updated, we need to use the new upper limit and lower limit. We need to use the new upper limit and lower limit. I hope this point is clear to all of them. Now marginal relief, upper limit here is 125,000 minus augmented profit is 120,000 students into standard fraction 3 by 200 into taxable total profit, it is 110,000 pounds divided by augmented profit 120,000 pounds. So our marginal relief will be students 125, that is 5,000 into 3 divided by 200 into 11 divided by 12, it is 68.75. We'll round it to 69. So the total corporation tax liability will be students 27,500 minus 69, it will be 27,431. I hope this point is clear. I hope this point is clear, students. Now students, we will be seeing the case of associated companies. So now students, we will be seeing the case of associated companies. A Limited in the illustration 1. So student, let's take an example here that the illustration 1 had some identification of the associated company. It will be very easy to identify, no issues in that. It will be easy to identify the associated company. But let's take an example of associated company being, let's take an example of associated company including the parent will be 5. So A Limited is in illustration 1, that is we have taken the associated company, has tax adjusted profits for year ended 31st December 2023 of 200,000 pounds. A Limited has no dividend income during the year. Calculate the corporation tax payable by A Limited for the tax year ended 31st December 2023, students. So students, this example will involve the next topic also, but we'll calculate the upper limit and lower limit of this question and keep it aside. keep aside. No student, this the associated one will be coming to next topic. First we'll complete this one more topic we have. This is the most important topic. After this we will be doing the associate part. But we have already learned that the upper limit and lower limit will be divided. If short accounting period and number of associated company. Now coming to accounting period straddling. Accounting periods straddling 31st March. When a company's accounting period falls into 2 financial years, students, we have seen that the financial year will start from 1st April to 31st March. But students, if the accounting period is falling in 2 financial years, that is 1st April 22 to 31st March 23 and 1st April 23 to 31st March 24. If our accounting period is falling in these 2 financial years, how we will account it? So students, what does accounting periods straddling means? If the augmented profit falls in 2 accounting period, how we will deal with it? When a company's accounting, the augmented profit falls in 2 financial years, that is the accounting period. Here, 1 minute students. It is accounting period. If our accounting period means will be the augmented profit. If the augmented profit is falling in 2 financial year, how we will calculate the tax? If when a company's accounting profit, this is accounting profit, falls in 2 financial years, the corporation tax liability must be calculated for each year separately if either of the following change: the corporation tax rates or statutory limits. So students, as we have seen, for the previous financial year only we had a main rate at 19%, no upper limit, no statutory limit, no upper, no lower limit. So if the accounting period falls between 2 financial years, we need to calculate the corporation tax for each financial year separately. If there is a change in corporation tax, as we have seen for the financial year 23, the rates have changed and the statutory limits also changed when compared to the previous finance year. The statutory limits and the rates of corporation tax change on 1st April 2023. Therefore, a two-part computation is required for an AP straddling 31st March 2023. So students, therefore a two-part computation is required for an accounting period straddling 31st March 2023 if the accounting period is between 2 financial years. The corporation tax liability must be calculated separately for each financial year, applying the appropriate rates of tax to each. So students, we have seen that if our accounting period is falling in 2 financial years, coming to this case, accounting period straddling. So students, here this means that if our accounting period is falling in 2 financial years, then for each financial year, we will calculate the corporation tax separately. Tax for each financial year, because students, there is a change in The first one is the rates and the second one is statutory limit. I hope this point is clear. So students, now we will be solving a question so that we have better understanding. Account period straddling means an accounting period is falling into financial years. O Limited has the following result for the year ended 31st December 2023. So they have not mentioned anything of short accounting period, students. Here nothing is mentioned, so it is for whole 12 months account. So it is for whole 12. So excuse me, so the 12 months means 1st Jan 23 to 31st December 23. So students, the 1st Jan till 31st March 23 is finance year 22, and from 1st April to 31st December 23 is finance year of 23. So now we need to calculate the tax for both the years. So students, here we will be calculating the corporation tax liability for each year, each financial year. Now students, now we will first the corporation tax liability we will be paying on TTP. Will be paying on TTP. I hope this is clear. So the corporation tax will be paid on TTP. So TTP, the TTP is 300,000 pound. Now, so students, from 1st Jan to 31st December we will be following the Finance Act 22 financial year rates of 22, that is 19% flat. So now students, here we have two methods to solve this, but in your books, in your Kaplan book, it is provided only one method. I will be solving in two methods. The second method will be easy and it will not be confusing, it will be very easy to understand. So now coming, in this case it will be easy, but in certain cases it will be difficult. I'll be showing the calculation, no issues. Now coming to the first case, as per our books, so students, now the TTP, then students, as we know that the finance year of 22, it is 19%. So this 300,000 is for the whole 12 months. Is for the whole 12 months. Is for the whole 12 months. So student, 12 months means for 3 months it will be at 19%. So 300,000 into 19% into 3 divided by 12. I hope this is clear. This will be 14,250. Our corporation tax liability for finance year 22 will be 14,250. But now coming to the case of finance year 23. For the finance year we have the statutory limits and augmented profit. So the augmented profit will be, students, the augmented profit will be TTP plus 20,000. So it will be 320,000 pounds. And the statutory limits, as statutory limits will be divided if we have a short accounting period. But here students, our accounting period is not short, it is for whole 12 months. So the statutory limits will be the same. Our statutory limits is for the whole 12 months. So upper limit and lower limit. Upper limit will be, students, 250,000 pounds and lower limit will be 50,000 pounds. So now Finance Act 23, so this 30,000 into 9 divided by 12. So students, as our augmented profit is 320 and this is about 250, and our augmented profit is about 250, students. Our augmented profit, we need to compare the augmented profit with the statutory limit, students. The augmented profit exceeds the upper limit, so it will be taxed at the main rate. It will be taxed at the main rate. It will be taxed at the main rate. So it will be, students, 25% into 9 by 12. So this will be 30,000 pounds into 9 divided by 12 into 25. So this will be 56,250. This will be 56,250. So the total liability is, students, 70,500. 70,500. I hope this is clear. Now, students, we will be using the second method. Now coming to the second method. Second method. So in the, students, in the second method, we will apportion everything and we'll calculate it. So the simple Finance Act 22, it will be the corporation tax will be calculated on the TTP into apportion it 19%. So it will be 14,250. Now coming to Finance Act 23. So for Finance Act 23, students, into 3 divided by 12 into 9, because for 9 months, till here I think no issue. Now, students, coming to the, for Finance Act, we need to calculate the augmented profit. Our augmented profit needs to be compared to the statutory limits. But students, let's take a click here. This statutory limit is 250 and 50,000 and the augmented profit is 320. So this 320, now students, this 320 belongs to whole 12 months accounting period. But in that 3 months belong to finance year 22. So it will not be included in this year. So, but the augmented profit rules apply for the finance year 23. So it starts from 1st April. It starts from 1st April to 31st March. After 1st April, it will start. So it will be applicable for 1st April till 31st December in our case. But students, this 320 is for the whole 12 months. Please do understand. This is for whole 12 months. But the augmented profit rules will apply for the 9-month period only, no? So we will apportion this also. This is the second method, students. Do not confuse the first method and the second method. We are trying the another method how to do. So this augmented profit will be into 9 divided by 12. It will be 240. And students, the statutory limits. The statutory limits are for whole 12 months. The upper limit and lower limit 250 and 50,000 pounds. Excuse me. So students, the first case was we took the total and we took the total and we did it, and then directly we apportion. But in the second method is that this is the additional method how to solve. So students, here as mentioned by me, we need to apportion everything. The accounting period is 12 months, but the starting 3 months are in the finance year 22, and this belongs to that finance year 22, the 3 months. But the statutory limit is for the whole 12 months. But for the statutory limit rules applies for finance year 23, and in finance year 23 only 9 months are there. So we will apportion this also. Till now, students, we have learned that in a normal methods, we have learned that we will apportion the upper limit and lower limit if short accounting period is there. But by doing the calculation, this is specially for the straddling part. If you need, you can follow this method also. So here we need to apportion everything which belongs to the finance year 23. So finance year 23, the statutory limit for 12 months is this, students. We have 12 months accounting period. But for this finance year, 23 finance year, the 9 months is only, the 9 months rule will only apply, no, for the finance year 23. April, May, June, July, August, September, October, November, December, 9 months. But the statutory limit is for the whole 12 months accounting period. But for the finance year, the 9 month, the statutory limits only is applicable for the finance year 23. So finance year 23 we have only 9 months. So this will apportion, it will be 225 into 9 divided by 12, it will be 187,500. 50,000 into 50 into 9 divided by 12, it will be 37,500. Now students, the augmented profit is 240. We need to apportion the augmented profit and SL because this belongs to finance year 23, but the 3 months we need to forget it because that belongs to finance year 22. So this, now the augmented profit is, students, the augmented profit is above, the augmented profit is above the upper limit, so it will be taxed at the main rate, that is 25. So we will be getting the same answer, 56,250. I hope this is clear. We'll get the same answer. This is the second method, students. We'll be following the first method only, but we will be doing to the second method. But you need to follow one method in your examination. We'll be following the first method. Now coming to the second question. F Limited has TTP of 75,000 pounds and receives dividend from non-associated company of 15,000 in a year ended 30th September. So here only 6 months are falling. 6 months, because nothing is mentioned about short accounting period. So it will be for 12 months period. So it is October 1st October 2022 till 31st September 2023, students. And from 1st April till 31st September 23, it will fall under which head? It will fall under finance year of 23, and this will fall under the finance year of 22. So but the corporation tax liability will be based on the TTP 75,000, and we need to, for the finance year 22, finance year 23. So 75,000 into 6 divided by 12 into 19%. This, I hope it is clear, because 6 months are for the finance year 22, and for finance year 22 we are charging only 6% tax, only for 6 months, sorry. So 7,125. Now coming to the case of into 6 divided by 2. Now we need to select it. Now how will decide, students? We need to compare the augmented profit with the statutory limits. The augmented profit will be the TTP plus statutory limit. Not the statutory, the dividend 15,000. So it will be, students, 80, 75 plus 18, 90,000. 90,000 is the augmented profit. I hope this is clear, students. Now students, now the augmented profit needs to be compared with the statutory limit. Statutory limit will be apportioned if two cases, associated companies and short accounting period, but none of these apply. So upper limit and lower limit will be 250,000 pounds and 15,000 pounds. So students, please do not confuse with the second method. Please do not confuse. This is for your understanding. This will be seen if it will be helpful or not further. We'll be doing some further calculation. We have an idea. But we are following the first method. So students, now our augmented profit is 90,000 and the upper and lower limit are 20. So this is within the 50,000. This is within the upper limit and lower limit. So it will be taxed at the main rate plus marginal relief will be available. So students, the Finance Act, it will be a marginal rate 25%. 75,000 into 6 divided by 12 into 25%. So this will be 9375 less marginal relief. And students, we have seen the marginal relief will be applicable for finance year 23. So now here we have a catch. See here, students. Now the marginal relief, the formula is upper limit 250,000 pound, no issues. Augmented profit 90,000, no issues. Into standard deduction, no issues. Into TTP, the TTP is 75,000 divided by augmented profit. So students, this marginal relief will be, the marginal relief will be minus 90,000 into 3 divided by 200 into 75 divided by 90. So the marginal relief is 2000. I hope this is clear. The marginal relief is 2000. Now students, as we know that the marginal relief will be available for the finance year 23, and for finance year we have only 6 months. See, the amount, the TTP we have apportioned it, and the rate also, but we have not apportioned the marginal relief. We have not apportioned the marginal relief. We need to apportion the marginal relief also. It will be 6 divided by 12. So 1000 will be our marginal relief. 1000 will be our marginal relief. I hope this is clear, students. 1000 will be our marginal relief. 1000 will be our marginal relief. So the total liability will be 8,375. I hope students this point is clear. The account straddling part. Accounting period straddling means accounting period falls in 2 financial years. We need to apportion and calculate. We need to calculate the augmented profit at same. But when we calculate the tax, we need to apportion, and we also need to apportion the marginal relief. We also need to apportion the marginal relief. We also need to apportion the marginal relief, students. So if you use the second calculation, students, we need not apportion the 1 minute, student. So in our second method, we need not apportion the marginal relief. So let's try. We will be trying. Here we will try, students. Let's have an idea. We will be trying. So now trying the second method. Second method. Month I have written. It is method. So students, now in case of second method for finance year 22, it will be same 75,000 into 6 divided by 12 into 19%. So it will be 7,125. Now coming to finance year of 23, the TTP will be 75,000 into 6 divided by 12 into, now we need to find the augmented profit. The augmented profit, it was, students, here 90,000, and this 90,000 is for the whole 12 months period. But students, in this 3 months are FY22. FY, so only 9 months. So 9 months will take augmented profit, because the augmented profit rule applies for the finance year 23, and finance year 23 we have 9 months. So augmented profit will be 67,500. Statutory limit, the upper limit and lower limit are for 12 months. But students, we will, no, 90,000 into 6 divided by 12. The augmented profit will be, students, 45,000, because here only 6 months period. Please do. Last question 9 months. Here 30th September, students, only 6 months. I hope this is clear. So 6 months, it will be 45,000. Now students, why we are dividing in year in starting? Because the finance year 23 will the augmented profit statutory limits are applicable for finance year 23. For finance year 23 we have only 6 months, no? So we are calculating. This is the second method. First method we have already solved it. So now coming to this. So this will be also, students, I have written the limit as wrong here. Please do 50. And this, students, it is 12 months, but only 6 months is available for the finance year. So 125,000 pounds and 25,000 pounds. So students, the augmented profit is 45,000, and this is between the limit of 25,000 and 125,000 pounds. So The corporation tax liability for FY23 will be payable at 75,000 pounds into 6 divided by 12. This is the profit for 6 months into main rate 25%. This will be, students, 9,375. Same, but less marginal relief. Marginal relief is augmented. The upper limit is 125. Second case, minus students, less the augmented profits. The augmented profits for 45,000 into 3 by 200 into the TTP was 75,000 divided by 2, 37,500 divided by augmented profit, it is 45,000. So students, by this calculation we will get our marginal relief as 1,000. Same. So our corporation tax liability will be 8,375. I hope this is clear. The second method. Please do follow the first method, students. Please do follow the first method. I hope this is clear, students. The account straddling part. The accounting straddling part, students. Now, students, further questions we have one. This is trading profit. No, students, this is the next part. Now, students, we will be seeing the associated part. The association. 50. The questions. I hope the account straddling part is clear. Accounting period means an accounting period. The accounting period will lie in 2 financial years. So students, now we will be doing the associate part. A Limited in illustration 1 has tax adjusted trading profit. So in the illustration 1, we have, this is for the purpose of the understanding of the number of associated company. But I have mentioned the number of associated company. Now we will be looking at the calculation part. We will be looking at the calculation part. So students, has tax adjusted trading profits for year ended 31st December 2023 of 200,000 pounds. A Limited has no dividend income during the year. Calculate the corporation tax payable by A Limited for the year ended 31st December 2020. So it is from 1st Jan till 31st December, students, and this is an inclusion of the straddling part, that is 1st Jan 23rd to 31st March 23rd, 1st April 23rd to 31st December 23. So FY 23 and financial year 22. So now A Limited has no dividend income during the year. So no dividend income. So our augmented profits and TTP will be the same, students, because augmented profit is calculated as TTP plus dividend from non-associated company and nothing is mentioned, so it will be both same. But the corporation tax liability will be on TTP. So students, the financial year 22, so here 200,000 into 3 divided by 12 into 19%. As for previous year it was 19, the tax slab, so it will be 9,500. Now coming to finance year of 23. Now coming to the finance year of 23. Now coming to the finance year 23. 1 minute, students. Short accounting period we have done. Okay, nothing is mentioned, no issues. So students, so now for finance year 23, it will be 200,000 into students 9 divided by 12. Now we need to see the augmented profits. Now students, the augmented profits is same as the TTP, that is 200,000. Now we need to compare with the statutory limit. Statutory limit is upper limit and lower limit. So it will be students 250,000 pounds and 50,000. And these limits will be apportioned or divided based on the short accounting period or number of associated company. And students, we have taken an example of the number of associated companies, and we have taken an example of number of associated companies being 5. So the upper limit and the lower limit, will be divided 5 by 5. So it will be 250 divided by 5, 50,000. This will be 10,000. So this will be a lower and upper limit, students. Now students, our augmented profit is 200,000, and this is more than the upper limit of 50,000, students. So it will be taxed at main rate, that is 25%. So this will be 37,500. I hope this point is clear. This is clear. Now moving to a further example. H Limited is the parent company of one whole owned subsidiary. So H is the parent, students, and one whole subsidiary, that is B Limited, and it owns shares 5% holding in the owns subsidiary. Subsidiary means more than 51% control. It owns shares more than 5% shareholding in number of other companies. So in many number of companies, it holds more than 5% holding. But for associated company, there must be control more than 50%. The H means Wholly Limited had the following income for the year end 31st March 2024. So it is 31st March means 1st April. No need of year, there is no accounting straddling year, students. So the tax adjusted trading profits are 60,000, interest income of 50,000, dividend received from B Limited, and dividend received from other UK companies. Calculate the corporation tax liability payable by H Limited. So students, now the corporation tax liability will be payable on the TTP, taxable total profit. Taxable total profit, it will include tax adjusted trading profit 60,000 plus interest income. It will include interest income as we have seen the format. Then any property income, no property income. Then miscellaneous income, no. Then chargeable gains, no. So it will give total profits. Excuse me, it is 1 less QCD. Nothing is mentioned about QCD. So 0. It will be taxable total profit. So it is, students, taxable total profit is same as our total profit. This is clear. Now students, corporation tax liability is calculated on the taxable total profit. Then the tax rate, we need to corporation tax rate will be determined using the augmented profit, students. Please do clear in mind. Corporation tax rate, augmented profit is compared with the statutory limits. So now students, augmented profits will be TTP plus dividend from non-associated companies. So TTP here is 110,000 pounds plus dividend from non-associated. So students, dividend received from B is a subsidiary, it is associated company, it will not be included. Dividend received from other UK companies. Other UK companies means shareholding of more than 5%, but no control is there. So it will be included. This 10,000 will, because it is dividend from non-associated companies. So it will be 120,000 pounds, students, augmented. Now we need to compare with the statutory limit. Statutory limit is upper limit and lower limit 250,000 and 50. So students, this limit will be divided or not apportioned if short accounting period. Here it is for full, and the second one will be the number of associated company, student. The number of associated company here is, students, here the number of associated company, our associated company here is, associated company includes, will not include dormant company, will include control. So in S we have control, so 1, and the parent company also need to be included. Please do remember, students. Dormant company will not be included. UK resident or OC resident company will be included, and companies that are associated for only part of the accounting period deemed to be associated for the whole accounting period, and the parent company is also the included in the number of associated company. I hope this is clear. So parent, so 2 associated company, so divided by 2, this will be 125,000 pounds, and this will be 25,000. And students, the augmented profit is 120, and this is within the limit. So within the limit means corporation tax liability will be payable at on the TTP, that is, our TTP is 110,000 pounds into main rate less marginal relief, So this will be, students, 27,500 less marginal relief. Marginal relief is, students, upper limit of 125,000 pounds minus augmented profit is 120 into 3 divided by 200 into the TTP is 110,000 pounds divided by the augmented profit of 120. So our marginal relief will be, students, 69. This will give the total corporation tax liability will be, students, the total corporation tax liability will be 27,431. I hope this is clear. Students. Till now we have completed a lot of topics, students. Till now we have completed a lot of topic. The tax, the resident status of the company, tax, the short period, long period of accounts, short accounting period, straddling, etc. Now, students, our next topic is about trading profits. Before that, students, will be trying a small example, one more question we'll be doing, so that we have better understanding. We have a further question to deal with it. So, students, as we have seen a lot of questions, now we'll be doing a question relating to the associated company. A small question. So, we'll be doing here only. Associated companies. Let's take an example, students. So, we'll take O Limited has the following shareholding. So O Limited is one company, and it has shareholding in many companies. The first one is W Limited, the second one is S Limited, A limited, C limited, B limited and D limited. So O has shareholding in these companies. So W, it has the percentage, shareholding percentage 30%, S limited will be 70%, A limited it is 100%, C limited it is 100%, D limited is 100% and D limited is also 100, A and B. So now students, so we have further notes also. Let's take an example that O limited sells A 30th September 2023. A limited is sold by O limited. And students, the C limited was acquired on, let's take 1st February 2024. And students, the third note is that, so this we have done, then 1, 2, and the rest company shares were held throughout the year. Held throughout the year. Held throughout the year. I hope this is clear. Now students, here these 3 points and one more note is that, let's take all companies are UK company. All companies are UK company, but except B. B limited is overseas company, and all company are trading company. All companies are trading, but D is dormant company. This is a short example, students. Now we will need to identify the companies, associated companies. Excuse me. So students, we have taken an example here. In our example, we have mentioned that O limited is one parent company and it's holding a shareholding in many companies. So will W limited will be associated company? No students, because no control. You need to mention no control. 30% no control, more than 50 it will become. Now coming to S limited. S limited 70%. So it will be associated company because more than 60% company and control throughout the year. A limited 100%. So control is there, but we have a note that we acquired on 30th September 2023. Our accounting period is 1st April 24 to 31st March. We'll keep it as simple. 2024. This is 23 students. So acquired on 30th September 2023 A limited. But students, we have seen the rule. If the associated company is, the company is associated for part of the accounting period, then for the whole accounting period it will be treated as associated company. So associated company. Control is there. Here control is there and will be assumed as associated company. Now for C limited, acquired on same, control is there and it is acquired. If the company is associated for part of the accounting period, then for whole it will be assumed the same. B limited 100%, we have control and all the companies are UK company. But students, they have mentioned here one thing. All companies are UK company, B limited is overseas. So overseas company will become associated company. For the number of associated company it will be included, students. Already we have mentioned here, already we have seen it. Understand that both UK resident and overseas resident companies are included in the number of associated company, because the number of associated company is the figure which will be used to divide the lower limit and upper limit. I hope this is clear. So It is a overseas company, but we have control. It is included. It is associated. Overseas it will be. D limited 100% control. Yes. No students, because D is a dormant company. No associate. So the number of associate here is, students, W, S, A, C and B. 1, 2, 3, 4, 5, and we need to include the parent company also, students, and we need to include the parent company also. No, students, sorry, here W will not be included, only 30%. So 1, 2, 3, 4 and O. So total associated companies will be 5 companies. So students, and the upper limit and lower limit will be divided by number of associated company, and in number of associated company we need to include parent also. I hope this is clear. Now students, we have a small question which is very interesting. We will be doing so that we have a better understanding. Let's take an example here only, students. This is very simple. It's an example which we have not covered yet. So let's take an example. It's related to all topics. It will cover all topics. So let's take an example. 1 minute, student. So students, let's take an example. A company has TTP of 120,000 pounds and no dividends from associated companies, from non-associated, as well as no dividend from non-associated and associated companies. But students, the accounting period ending is 9 months, that is 30th September 2023. So we need to calculate the corporation tax liability. This is the question, student. So students, so this is for 9 months. 9 months means 1st Jan 23 till 30th September 23. I hope this is clear. So this is for 3 months for finance year 22. This point is clear. This is 6 months finance year 23. Now calculate for finance year 22, the corporation tax liability will be 120 TTP. Corporation tax is paid on the TTP, but augmented profit is used to determine the corporation tax. This is 3 divided by 9 into 19%. I hope this point is clear. Till here it is clear. So it will be 7,600. It will be, students, 7,600. It will be 7,600. Now coming to the case of finance year 23. Finance year 23, the augmented profit will be only for 6 months. So the TTP will be 6 divided by 9. Now students, we need to find the augmented profit. The augmented profit is TTP plus dividend, no dividend. So the same as our TTP. Augmented profit and TTP will be same. Now this we need to compare with the statutory limit. So the statutory limit will be compared with the, will be divided students, based on the short accounting period or number of associated companies. But here we have short accounting period, so it will be apportion. I hope this is clear. Till here it is clear, students. Please do try yourself, students. I hope this point is clear. As we know that the statutory limit is for the whole, it is for the whole 12 months. It is for the whole 12 months, students. It is for the whole 12 months. So now, it will be 250 into 9 divided by 12, 187,500, 50,000 into 9 divided by 12. It will be 37,500. I hope this point is clear, students. Now our augmented profit, we need to compare with the statutory limit. The augmented profit is for 9 months and this is also for 9 months, no issues. So it is within the limit. Within the limit, students. It is within the limit. It is within the limit. So it will be paid at the main rate. The tax will be paid at the main rate, that is so it will be paid at the main rate, students. I hope this point is less will be eligible to the marginal relief. So marginal relief, please do try yourself. The marginal relief formula is, students, upper limit less lower limit, upper limit minus augmented profit into 3 by 200 into TTP. TTP is 120 divided by augmented profit. Augmented profit is 120, same. $187,500 minus I hope, students, this is clear. Now, as the augmented profit is, students, the augmented profit is falling under the limit. So, it will be paid at the marginal rate. So, it will be 120,000 into 6 divided by 9 into 25%, 20,000. But less relief, marginal relief. Now, we will calculate the marginal relief. Marginal relief is upper limit. Upper limit, it is upper limit. What is upper limit? 187,500 less augmented profit 120,000, students, into 3 divided by 200 into the taxable total profit is 120,000 and our TTP is also 120,000 pound. So into, and students, the marginal relief here is only for the 6 months. The marginal relief is only for the 6 months, students. So into 6 divided by 9 into 6 divided by 9. It is only for the 6 months. And our accounting period is also for 9 months. So the marginal relief will be, students, this will cancel. So this will 187,500 minus 187,500 minus 120 will get 67,500, students, into 3 by 200 into 6 by 9. It will be 675. So our CLT, our corporation tax liability, will be 19,325 and total it will be this plus this. I hope this question is clear. I hope this question is clear to all of you. I hope this question is clear to all of you students. Students, we can try this in our second method also, the second method. But please do follow the first method only students, no issues in that. Now coming to the second method, this is for practice purpose. Second method FI20, it will be 120,000 into 9, 6 by 9 into 19 percentage. It will be the same case students. The amount will be 7,600. No, it is, sorry, it is 3. It will be 3. So it will be students here 7,600. We need to concentrate on the marginal relief students, because here it is only for 9 months and 6 months is for the available for the marginal relief. It was 12 divided by 6. If it is 6 divided by 8, you need to see the accounting period also. Now students, coming to FI23, it is 120 into 6 divided by 9 into, now we need to calculate the augmented profit is same as the TTP. It is 120,000 pounds. But students, the TTP is for 9 months and for the finance year of 23 only 6 months. So we need to calculate the 6 months. 120,000 into 6 divided by 9. Our AP is 80,000. Now upper limit and lower limit. Upper limit is 250 and lower limit is here students 50,000. As we know students, in the second case, the upper limit and lower limit will be divided. Short accounting period. Your accounting period is only 9 months. And students, the lower limit and upper limit will apply for the finance year 23. And finance year 23 start from 1st April. And from 1st April, we only have 6 months. So 6 divided by 9. 6 divided by... No, students. 6 divided by 12 it will be students, because this is for 12 months period, but our accounting period is only for 9 months students. Our accounting period is only for 9 months, but for finance year, in our second method, we only will see the year for which for the finance year how much month it will be applicable. So here it will be 50,000 into 6 divided by 12, 25,000. Here it will be 125,000. And students, our augmented profit is 80,000. It is between, so it will be taxed at marginal rate 25. So it will be 20,000. I hope this is clear students. Now coming to the next case. Now students, marginal relief. Marginal relief we will be calculating using the 125,000 pound minus the upper limit minus the augmented profit. Our augmented profit will be students our augmented profit, we have 9,120. This belongs to 3 years into 9 divided by 12. No. 120,000 is for 9 months into 87. So it will be students here, it will be 80,000. Our augmented profits, and our TTP will also be students, our TTP will also be into 3 divided by 200 into TTP for finance year 22-23 will be only 80,000 students. Please do multiply and see, into 6 divided by 9 is 80,000 divided by augmented profit of 80,000. So this will also give 675. So less 675. This will be 1,000, 19,325. I hope second method. But students, you follow only the first method. Do not concentrate on the second method. Only follow the first method. First method. First, we need to. This is the accounting straddling question. We need to see the accounting month. So the accounting period short. We will apportion the upper and low limit, as the upper and low limit will be for the whole 12 months period. So we'll apportion it, get it, then we compare our augmented profit, that is 12,000, this it will between the range, and then the marginal relief is only available for 6 months. The marginal relief is available for 6 months, but our accounting period date is 9 months. I hope this is clear. So students, if the accounting period was 12, 6 divided by 12. If the accounting period was 8, 6 divided by 8. I hope this is clear. By solving this question, second method, do not follow it. This is only for simple your understanding. So please follow the first method. So students, now we have completed till accounting period straddling. So we will stop the class today here, and in the next class we'll be continuing the further topics of the corporation tax. Till here it was very important. These were the changes. From the next, we'll be seeing the same which we have studied in chapter number 7, the trading profits, capital allowance, etc. all other things. I hope students today's session was very interesting and good. If you like the video, please do subscribe my channel and please do share other children also so that they can study, other students. So I hope today's session was interesting. Goodbye. Have a good day students, and thank you.